Hi everyone. Thanks for joining us today. I'm Andy here, and I'll be your moderator for today. Once again, like to welcome you and thank you for joining us for this Wow Digital Online Series, episode 6. And today, I think the key topic for this discussion today is really around e-commerce and last mile logistics. Once again, I'm Andy Tai. I'm a managing director at Goldman Sachs. I run our business covering technology across Southeast Asia. And I think with me today are three distinguished friends of, I think, the overall tech landscape. I'll have them introduce themselves in a minute. But we have Giulio from ZALORA, Lynn from Ninja Van, as well as Agung from Warung Pintar joining us today. Guys, maybe hand it over to maybe Giulio first. Maybe spend a minute, quick introduction of yourself, your background, and the company. And I think Lynn and Agung can do likewise after you.
Thank you, Andy. Good afternoon, everyone. Well, for a start, my apologies for my camera. It seems to be playing games with my face and not fully recognizing the background compared to it. Anyways, a few words about myself. I've been in Southeast Asia for 8 years, working in the e-commerce landscape, and all 8 of them with ZALORA. Before that, so originally I'm Italian, and I spent some time on the European e-commerce market. At that time, it was with Rocket Internet and looking at a bit at the payment landscape, but mostly at the home and living furniture online landscape of a company called Westwing. ZALORA itself operates across 6 Southeast Asian markets and Hong Kong, Taiwan. Its main markets would be Indonesia, Philippines, Malaysia, and Singapore. The company is part of a bigger group since 2014. That bigger group is Global Fashion Group. Global Fashion Group operates also in Russia, in Australia, New Zealand, and in Latin America. What we do is the same across the entire group. We sell fashion and beauty online across a multitude of business models, ranging from private label to marketplace models. We run, relevant for this session, we run our own logistics in quite a few parts of the world. In some cases, we have split off our logistics arm, but we also utilize across all markets third-party logistic providers such as Lynn's company here, Ninja Van, as well as many others. Anyways, that's enough about me. I think next is Lynn or Agung.
Okay.
You want to go?
Yeah. Okay. Hi, good afternoon, everyone. I'm Zheng. I'm the Chief Operating Officer for Ninja Van Malaysia. So I joined Ninja Van 3 years ago as the Vice President of Regional Operations. I work on various projects across Southeast Asia before I started my role in Malaysia 2 years ago. And a quick introduction of Ninja Van. So Ninja Van, we are a tech-enabled logistics express company. We were founded just in 2014. We experienced tremendous growth and emerged as one of the region's largest and fastest growing last mile logistics company. So right now we are in 6 countries in Southeast Asia: Singapore, Malaysia, Indonesia, Thailand, Philippines, and Vietnam. And all together we operate across over 1,000 hubs and stations, and we deliver more than 1 million parcels a day. So maybe over to you, Agung.
All right, thank you. So I think thank you guys for joining this sessions. My name is Agung, the co-founder, and right now is leading the company called Warung Pintar. So this is a quite a young company. We started in 2017, so almost 3 years ago. And we are doing we are serving the mom and pop shop, especially in Indonesia. Right now we're only in Indo. And we are doing basically e-commerce, supply chains, and also a bit of SaaS for the Warungs, specifically for this micro SME. Thank you.
Thanks, Agung. So I think we can move on to a quick kind of discussions around getting everyone's observations and reactions to the current state environment for e-commerce and last mile logistics. That's it. I think for the benefit of our kind of audience today, just some quick housekeeping. I think one, if you find yourself disconnected at any time, simply just log right back in with the link that received. 2 is we'll have a Q&A at about for the last 15 minutes of this session. So to the extent that you have any questions, please feel free to punch it in the Q&A box, and we'll try to get to them as well. And so I think, without further ado, let's just move on, I think, and really get some really insights from the three members of our kind of team today. And I think a good place to start is maybe and maybe for all three kind of presenters today, the onset of obviously the global pandemic has brought around many shifts in your business model, and it feels like in this environment, the direction needs to be a bit more flexible. Just wanted to get your views around how your business model has kind of reacted to, and what you have done in the current environment with COVID. So Giulio, maybe I'll hand it over to you to kick us off, and then we can kind of go around as well and getting thoughts from Lin and Agung as well.
Yeah. Thanks, Andy. It's a huge topic, so if I start blabbering away for too long, please stop me and pass to the others. I mean, we had two, when COVID hit, and let's talk about the beginning. So the first slump in e-commerce sales that then actually backflipped into a strong acceleration. What we saw were three main changes that were needed to our business. The first, we can call it the consumer-facing side. The second one would be the purely financial, what we call a balance sheet and risk side. And the third one is the, let's call it operational side. So if I approach it from that side, I mean, aside from, when lockdowns kicked in, we saw in every country for 2 weeks a sales slump. But after that, sales picked back up. This said, from a consumer-facing perspective, what happened was those sales picked back up on completely different categories. So rather than being a heels, sneakers, and dresses business, we became overnight a sports apparel, pajamas, comfort clothing, and beauty business. And we started listing, still marginal, but we started listing essentials as well, and home essentials as well as toiletries on our side. So from a consumer-facing perspective, essentially what happened was demand flipped across in shares across categories. And so both our offering, our sorting algorithms, our banners algorithm, our recommendation algorithms had to all shift with that. This said, that was, let's say, the easy part compared to what happens at balance sheet level. As a business, ZALORA holds inventory and takes a risk on around 50% of the inventory we sell. Now, that balance sheet risk means that we are holding a lot of millions in terms of balance sheet risk on perishable goods, because fashion goes out of fashion fast. And we had to work very hard on flipping that, managing that, de-risking that, working with our suppliers on switching sneakers or heels for apparel or beauty, and reformat our investments, as well as, where possible, lengthen the payment terms to, to stretch out our cash flow curve. Not because we had a problem in the immediate term, but because we simply didn't know what was going to happen. So the volatility of the future changed completely from the CFO. And last but not least, logistics. I think Lin will talk a lot more about this, but we were okay in most countries. We had to implement in all of our warehousing social distancing and sanitation rules. Philippines was an exception. The Philippines, I would say, the whole ecosystem for delivery kind of broke down together with the lockdown imposed by the government, which was more stringent than other markets. So everywhere, SOPs had to be changed. We had to lengthen the working hours by dividing it into more slots with a lower concentration of people. And all of our riders had to be instructed on sanitation of packages, of their own hands, on delivery methodologies, masks, etc. But again, I think Lin can say more about that. So I'll stop answering the question from a ZALORA perspective and pass it on to the other speakers.
Okay. So on the Ninjavan's perspective, I think, as Giulio mentioned, I think it's a mix of ups and downs initially. But I think our business of bridging the online e-commerce world with the offline deliveries remains the same. So as mentioned, during the first few weeks, I think we see a sharp drop in parcel volumes as there was a lot of fear and uncertainty in the market. People weren't sure whether they could operate, whether they could still sell on certain platforms and so on. But gradually over the few weeks, after the initial few weeks, we see a big uptick in e-commerce volume as people run out of ways to buy items. I think only grocery stores and pharmacies were open, so any goods they could only buy on e-commerce. So from there on, we see a significant uplift in volume. So I think the first thing that comes to our mind really is how do we ensure that our employees and our partners are safe to come to work despite the COVID situation. So because they are delivery riders, our warehouse staff, they can't possibly work from home because they have to handle physical parcels. So we have to really develop SOP very quickly to make sure that like temperature screening, safety distancing, face masks, which were back then were really short in supply, as well as hand sanitizer. So these are the really basic things for us to tackle first before we could carry on further. Then with that, there were also a lot of issues where delivery times are dramatically reduced because during the MCO period, there were certain restrictions on the certain times that we can go. Even there were also restrictions on petrol stations, which were closed from 8 to 8. So our overnight trucks had to find alternative way to get fuel in order to continue the journey to the further parts of Malaysia. So our cost, and this was further, it wasn't during the Ramadan period where we had to take more breaks during the day for breakfast, so that further reduce our capacity for delivery. So our cost structure also went up disproportionately across different areas. So one of the main ones we see will be the air freight to East Malaysia. So as the domestic travels come to a halt, right? So there's no more passenger flights going to East Malaysia. So from there, we see that the cargo capacity to East Malaysia dropped dramatically, and there were only a few freighters that goes to East Malaysia, and that results in a big backlog of any freight going from west to East Malaysia. And I think even to today, we do see the impact is being carried forward from that time onwards. So I think with that, I think we were able to adapt to our new norms, getting more capacity, hiring more drivers to cope with the reduced delivery hours, and with that we were able to cope with the huge increase in the volume of orders. So we managed to, as we are quite nimble and agile, so we were able to get the extra resources in time to fulfill the orders.
Okay, that's very helpful. I know I'm going to have any observations. Obviously, Indonesia.
Yeah. So I think So for us, I think I would see something different since you guys already discussed on the operational side and on the demand side. I think for us when it hits first in Indo, right, especially when people start working from homes, it was really shocking, right? So what I do is I just it was really hard for me and my team at first because we don't really understand, right, what's going to have to happen. And then some of our shareholders start calling me what's happening, and we are also seeing some changes in our daily orders. So the first thing what we do is actually we try to understand what's happening, right? And if you look at if you are asking me what are the biggest impact on the pandemic to Warung Pintar, is that it's actually really pushed us to be closer to our user base, right? So what we do in the first, I don't know, two weeks is actually we try to call almost every users that we have. That's about 50,000 of them, and try to understand what's happening. Try to understand why the basket size is going down. Why I just came back from a meeting with one of the biggest cigarette company in Indo, and they are panicking because they're losing about 26% of their sales in the last 3 months due to this, and they don't know why. And I think it happens, and you could see, right, a lot of things like Giulio has been mentioning, right, there's some changes in SKUs, changes in what people needs in warungs. People still come to warungs, but people stop buying normal thing that they bought. They buy more of the household items. Our sales um, in staple goods has grown about like what 3x in the last three months, and but then we are losing a lot of more lifestyle SKUs, and I think this also then changes the landscape of supply chain as well, which is then very good for us because we've been trying to push that change in supply chains, especially in the FMCGs and consumer goods, where most of our items and things that we're dealing with, and Indonesia has been in very dinosaur industry here in Indo, right? You meet a lot of like distributor who's still doing pen and paper for the last 50 years and they don't want to change, and this has actually become an opportunity for them to change. And I would say that the biggest change for us is actually it's not making us change anything. So we don't pivot or change anything. It just give us a big boost of um, push to launch new product, to improve a lot of things, to work very more harder to make sure that our system is there as we scale hard. So I think for Warung Pintar especially, our market, since we are on the consumer, very deep on the staple consumer goods, I think it doesn't really it's really kind of challenge the previous conventional supply chain, and it's actually give us opportunity to bring it to the market, to let both from the Warung side or distributor side or even to the manufacturing sides, ways to think different, ways to think, hey, we could use this digital technology to improve everything, and then we'll be very okay, right? So I think, yeah, that's what happened from our side, indeed.
Okay, I mean it's interesting, and then like you said, I think the key observations obviously is being dynamic and flexibility around strategy and execution, right? And more importantly, it feels like as everyone talked about, getting close to the user, the customers itself, and I think that's why we're all involved in our various industries. Is we do see the opportunity to ultimately disrupt incumbents and hopefully with COVID kind of drive change in the whole structure, industry structure. Which is, I think, a good point. I guess maybe I'm going to start with you. Is you talked about and we've seen this from a lot of other industries and historical precedents that even in downturn, it's a positive catalyst to drive change. What are your observations, or maybe a case study you can kind of share any insights? How you use like COVID to kind of address one of the key issues for the business before COVID, and kind of use that as a kind of a kind of catalyst to drive change. Any thoughts around that?
I think the simple case on our side, right, is that supply chain of FMCG supply chain, especially the way that 75% of the consumer goods still goes to the traditional channel and still goes with heavy sales army, is not viable anymore, right, during these times. And that's the biggest case that we try to bring to the table at the supply chain, that hey, I think it's not safe for you to send out thousands or hundreds of thousands of or your salespeople around warungs that could be it's hazardous for everyone. And I think it's also in terms of cost, it becomes very costly, because then you have to think about protections and so on and so on. And when things happen, like it's already happened here, some of some distribution company have 1% or 2% got infected and then bring the virus to their operations, and that's really bad for the company, and unfortunately they have to shut down their operations and move it somewhere else, and you don't want that to happen to your company, right? So I think the good case right now to bring digital and all the transformation, especially on the operational side, I believe ZALORA have a lot of good things as well in their warehouse, and this digitalization change from doing the pen and paper of the supply chain to like what we're doing now is actually more efficient, not only in terms of protections but also in terms of economics. Since right now, I mean, like everyone is asking the same questions, right? can our e-commerce, can our digital economy be as profitable as our previous companies, right? And that has been a questions that very hard to answer for a lot of us. But I think if the key here is that this could be the good time to show that it's viable and it's could create it could drive the economics better with digital tools such as ours.
No, I think you raised a good point there, which is I think in some ways ZALORA is in that same situation. I don't, Giulio, if you want to comment or talk about specifically then as you adapt to I call it the new normal these days in some ways. Any particular pivots that the company has done that really I think in your mind, aside from having a very flexible strategy, kind of accommodated I think the current environment.
Yes, I think there's been a number of moves that we took. You could call them pivots. Then, I mean, we are relatively young for the offline world, but we are already old for the digital world. So our pivots are probably not as flexible as a young startup. But what we did realize, and I can go across maybe 3 segments, is the following. So, and I saw a very nice article by the guys, the Shopback CEO, who is a former ZALORian, Henry, that just came out today. And he said in his article, he was saying, one of the key things that will help you throughout the pandemic is expansion. And he didn't mean expansion by pure, straight down the line of growth, more customers on what exactly you do. He meant expansion as a means to growth together with diversification. And look, if I think about what could happen in the next 6 months, I would apply, and maybe I'm a pessimist, but I would apply a 51% probability for each market to go into a second lockdown. And now what I do know is that the more markets I have, the more likelihood there is that those lockdowns, contrary to phase 1, will be in different moments in time. So first of all, we realized, and I agree with what Shopback was saying, that you need to re-equilibrate the weights of your markets. And being overly skewed on a specific market increases risk. We're not going to open new markets. That's a bit too big of a move for an older company like us. But we are realizing that we are acquiring new customers with a more balanced speed across markets, knowing that there might be a lockdown on our biggest ones at any point in time. We also took a second approach. We realized that when lockdown happens, as I said earlier, the category split shifts a lot. And the problem we have is supply is not as flexible as demand. So it's not as easy to get enough yoga wear or pajamas in time to confront a immediate week-on-week shift on demand. So what we've been doing is, in every country, we're expanding our category. So first step, we started investing more in beauty. Second step, we started investing more in kids. Third step, we're now investing in expanding our home and living category. Within home and living, we're building an essentials, a mart section. Now, this compares to 12 months ago, I only had adult male, adult female. Now I have a whole kids section, a whole beauty section, a whole luxury outlet section, and a whole home and living section. So I'm also de-risking myself by diversifying where demand could point towards. And then we always go back to balance sheet, Andy, because again, we are a retail company online with 50% of retail sales. And we had, again, 50% of sales depending on warehouse inventory, which is very often cash flow negative. So what we've decided is to reshift that focus and start pointing towards a business that is, in a year's time, 60% or 70% not retail, but marketplace or fulfilled by ZALORA. So whether it's marketplace from outside our warehouse or from inside our warehouse, and hence de-risking our balance sheet and having a different cash flow curve, which allows you to be incredibly more elastic because you can then go and buy more, worry about what to buy more of, but not have to worry so much about what you've got too much of. when there is a demand change. Those I would say are our moves. In logistics, what we did, and maybe it opens up to Lynn answering the question, but is also the same thing, diversification. So we realized that we need to have more logistic providers by country. So we started signing on more contracts, more players. NinjaVan has always worked with us, but for example, didn't work with us on some routes. We expanded the number of routes that we work with NinjaVan on. We own, in a big JV, most of our deliveries in the Philippines. So we have a company called Entrego that does delivery for us and for other companies. So we also monetize that. And our Philippines business was heavily reliant on Entrego until the lockdown. After the lockdown, Entrego is still our strategic priority, but we expanded the providers that have API connections and contracts in place with ZALORA Philippines, knowing that the capacity limits that a lockdown would bring on the logistics side need to be diversified as well across multiple players. So NinjaVan is also helping us in the Philippines. Those, I think, are the three key points.
So I'll hand it over to Lynn in a minute to maybe talk through about, at least Lynn talked about how I think NinjaVan from an operational standpoint is obviously being, modified. Have modified the operations to talk about to comply and with the lockdown rules from an infrastructure standpoint. But that's it. Maybe I assume they're doing more things to help also cater to how, in terms of their customer base, the needs have kind of evolved. That said, I do agree with your observation around, I think that for the best companies now, everyone is, I would say, staying away from saying that, look, I think COVID will happen, and end, in 12 or 18 months. Let's just plan for the long term. No one should really have a kind of, as part of their strategy, think that COVID is something, just 12 months and that's it. It's not something you should plan as an interim solution. I think the best companies, from my view as observation, will not have a view actually how long COVID will last, but rather fundamentally restructure their operations so that they can actually last throughout, as long as COVID will be around. I think that's actually more important. If companies actually think that this is temporary and try to just limit themselves to a very specific timeline, I think that's actually very, very difficult, because what happens if COVID lasts, above and beyond the timeline that they're expecting? So I think that's just something to bear in mind. But Lynn, so maybe handing over to you then is, I think you talked, like I said, you talked about the infrastructure side, what you're doing to comply with lockdown. But how is, I think, NinjaVan kind of addressing, I think, changing needs from your customer base as well?
So, okay, I think for us, I can just cover two aspects of our customer touch points and how it evolved during the lockdown. So first of all is, as we know, during lockdown, right, as in we meant to minimize people-to-people contact. So I think one of the key things at the start is to launch a contactless delivery option. So we work with our technology team in Singapore very closely. So within about a week, we managed to launch the new product in our driver app to have this contactless delivery where we deliver parcels to the person's house, and instead of the usual proof of delivery that they take the phone of the driver, which I think is a way we can pass barriers, right, and sign on it. So we decided to change it to a photo taking option, such that we pass the parcel to them, they pick it up, and then we just take a photo as a proof that we have delivered a parcel. Of course, at a safe distance of about 2 to 3 meters, we take the photo, so that replaces the need for physical contact and replaces the need for a signature. So that really helped us at the beginning. When our tech team made the switch, we were able to convert all our drivers without the need to educate them fully, because the steps that were involved were intuitive. They say, okay, now take a photo. They managed to comply with that quite quickly. Then on the other part, on our customer service end, we had some issues where our contact center, we need to adhere to the safe distancing measures on the workplace for COVID. So we could not place as many agents on the floor as they could come into close contact with. So some have to work from home, and then there needs to be shift more away from the call, from the traditional phone call. So we made a conscious decision to push our then pilot project that was more on live chat. So back then we were only doing about 10% of live chat, where customers go to our website, check with us on where's my parcel and so on. So we make conscious decision to push, and then we manage to view the results. Even to now, our conversion rate from calls to live chat has increased, and live chat has increased from about 10% of our contact to close to 30 to 35% of contact at the moment. So I think that's one pivot that I think proved to work for us, and then it continues from now on. That customers get used to it and they demand for live chat instead of waiting on a call. As for what I think one of the issues we faced was on the supplier side. I think there was a short supply on the poly mailer side. A lot of the industry were forced to shut, so we managed to get our usual suppliers, such that some of the poly mailer pockets were too loose, and a lot of the recipient data is actually dropped out. So that result in delay that faced by customers, where they couldn't find parcels because the recipient data were dropped, and we needed to find ways to overcome that. So only towards maybe a month ago, when everyone starts to operate at full steam, then we managed to replace all these poly mailers for our customers to reduce the rate of drop label parcels.
Okay, that's helpful. I think I think we spend a lot of time talking about changes in strategy, how everyone's being flexible, and I think ultimately being dynamic and realistic in the current environment. And so, and this is really a question for all three, and I think it's really benefits ultimately the entrepreneurs and our audiences. So we talked about changing strategy, but in your view, any guidance how you think about, okay, if we made a change, how long should we stick with the change? If it doesn't work, how long should we stick with it and decide ultimately to then do something else? Maybe Giulio, I'll just start with you. So you talked about a bunch of changes. I'm pretty sure it feels like there's some things that didn't really work out. How long, or in your mind, what's the right framework to think how long things you should try the new initiative, and then how long when you figure out it doesn't work to try to change things up?
Yeah, well, we try a lot of stuff, and it's a bit different. Also, we're big, and we have a lot of data under the belt, to put it in other words. So most of our changes are actually usually driven by being able to observe 2 or 3 days of data on it. We've got A/B testing tools, and thankfully millions of impressions per day to trigger that data. This said, that's not the case with, if we're addressing entrepreneurs and SMEs or rising startups, that's not always the case. And so my advice is to just be as agile as possible. I think, and here we're going nearly philosophical, but I think there's nothing wrong with pivoting as many times as you can in a 3 to 6 months period, even 5 to 10 times, as long as that helps you find your right demand intersection spot. I think actually the thing to critique is an entrepreneur that hasn't pivoted around and tested the waters. I think the worst thing that one can do is just dig a hole and stand fast. If you're digging a hole and standing fast because your opinion is the world will go back to the old normal, that's a fine opinion to have, and I'm fine with hearing that. But I would also then assume that you have a very strong answer and you've prepared your business for what if I'm wrong. So I would say pivot as many times as you can. If you have data, analyze data within a short time frame before pivoting to guide your pivot. And after that, just if you have your own belief and your own strategy, stand by it, but have alternatives, and always ensure and edge your bet in some way. I think that's also what investors at an earlier stage want to hear, to my old experience from the early days. They want to hear you having an opinion, but also challenging yourself and being your own devil's advocate of that opinion. I hope I wasn't too philosophical in the answer.
No, I think it's a good. I mean, there's no right or wrong answer, right? It's just really how people feel about the business and getting close to it. Agung, what do you think? I mean, you're also doing this day to day. Any thoughts around when you should implement change, how to implement change, and how to pull back?
I think it's come back to when you build a company. It's the thing that you build. That's the capability that you have to build, right? That's something that you have to it's a muscle, right? It's something that you cannot just have this because of these things. Then you have to build the capability from the zero, and you cannot do that. You should always have the capability to experiment, analyze, and try new things, and decide. I think the hardest things to do is actually decide whether we want to do this initiative or this pivot or not, right? The hardest part would be that decisions, and it cannot just be happens in your company or in your organizations or within your co-founders in just one night, right? It's a muscle that you have to build in your organizations. And I think to do that you have to do it like from smaller things, right? You have to make sure that even your for us, like warehouse manager, for our salespeople, for our category managers, they have to have this capability to experiment and find some things, even change and kill some of their initiative. And then you go up to something bigger. You go up to business model. You go up to unit economics. You go up to cash flow and everything. And there's no right questions, no right answers for this. And when to change or when to pivot is always comes in as the ability of a company, ability of the organizations and people inside the organizations, and it's something that you have to build. And actually, the current condition is actually a good wake up call to build that. So if you are building a company, you're building a startup, you're leading a company, then it's something that good and needed to be built, especially for now.
Okay. Lynn, any thoughts?
I think in Japan, I think we are a bit different from the ZALORA and Warung Pintar. I think less consumer facing, but I think for us, really, the culture of innovation and experimentation is very deep inside our culture. So we like to do small experiments. So when we have certain ideas, our staff will tend to we will tend to give them, say, okay, please do your own experiment, see the results. So we do a control experiment, measuring what are the inputs and what are the outputs. What is the measure of each initiative? If we see it might not, if it doesn't succeed at first, if we see as long as it's trending, that's better. So maybe there's an improvement in the speed of the delivery, there's a certain improvement, we will stay on. So what I think is really key is about being able to localize the experiment to a smaller scale, being able to measure the impact, and if we see it trends well, continue. If it doesn't trend well, just discard the idea, look for new ideas, and I think with that, we help us with our continuous improvement as we scale along the way. I mean, for us, as a startup with 6 years, right, going from only one delivery in Singapore to now in 6 countries, we did multiple experiment across the board through smaller, bigger scale. So I believe for me, that's the key part. So being able to have a control experiment, being able to measure the results, and then let the results guide you on whether you should continue or to stop what you're doing.
Yeah, that's a good point actually, and I think we spent quite a bit of time talking about the current state of affairs, how everyone is trying to tailor their kind of business to the current environment. But maybe again, same thing. A question for me, all three of you, is based on your observations today. Feels like we talked about things that are temporary and, like I said, catering to current rules. But from your observations, are there real fundamental changes that I think will last the long term that you have seen? Any thoughts around that? How would you think about that? And going around, maybe Lynn, I just start with you again. So is there any permanent change to the whole industry structure that you think will last quite a while?
So for me, I feel the e-commerce trend, the shift from retail to e-commerce will prevail even post-COVID. I think the whole COVID period is actually a big adoption curve for people. They are not doing e-commerce. So if we see right now in Malaysia, e-commerce is retail, depending on the research report, right? So maybe about 3 to 5% of retail. But if we look forward, looking at countries like China and US, they are maybe between 15 to 20%. I believe that Malaysia can close this gap much faster with the experience in COVID. where people have better adoption with the right infrastructure in the logistics in place. As we grow the logistics to support the growth in e-commerce, I believe that we can reach that point much faster than other countries have before. So I think that's how I view this will shape. I think e-commerce will play a big part in all companies, whether they are retail or not, to have a much more focus, increased focus on selling more on e-commerce.
Okay. Agung, anything to add to that?
I think I could follow up on the e-commerce side. I think I don't I just find out that from the look at it from our data that it shows that basket size is changing but frequency is increasing, and a lot of the warungs, a lot of our users are always saying that, hey, people around their place, the neighborhood, people who bought stuff from them is become more frequent. It's become, I think cash flow would be a biggest issue right now for a lot of consumers. So people would not only downgrade their their needs, but also increase the frequency of buying. So then I think it's really changed how e-commerce then being seen or being operated in the back as well, because then I think we right now is a great time. It's a time for all the e-commerce to optimize and improve their economics, their operations on the back, and to make sure that we could able to serve the needs, because I think the perspective is changing right now. The perspective is going to outside, going to malls, is going to a supermarket is a recreations, right? While you're buying your staple goods from e-commerce or from your closest place such Warung in Indo. So I guess then the whole perspective is different now. If it's changed towards something that not in the past where people go to e-commerce hunting for discounts. Now since it's changed, now I think that's a learning that could last for a while, even after this.
Okay, thank you. Giulio, what about you? I think obviously
I'm going to be repetitive to the others. I mean, it's e-commerce has a characteristic, that it's sticky. So I don't think any country in the world has seen the percentage of retail sales happening online ever decrease year on year. So, and this is because of a number of reasons. First, that actually whilst, and I like what Agung said, whilst the first wave of e-commerce was price driven, the reality is the stickiness of e-commerce rests on convenience. And from a demand perspective, from a supply perspective, as much as everybody, including ourselves, are trying to make that as easy as possible, and there's players like Shopify and Facebook that are disrupting the market in making it even easier to have a brand.com, as well as Shopee and us making our onboarding channels as easy as possible, our onboarding speed as easy as possible. There still is, from a supply perspective, there is a cost. There's an entry cost, no? So setting up your e-commerce shop, whether on ZALORA or on somebody else, is an effort. And what is happening in the last 3 months, and also through big government incentives, whether in Singapore, in Malaysia, all governments have pretty much rolled out SME digitalization programs, is that everybody is taking on that cost from a supply standpoint. So we have demand figuring out that it's convenience faster, and we have supply making that investment earlier. E-commerce is accelerating. So what was supposed, and we were, I read the Goldman Sachs report on e-commerce acceleration, and they're saying exactly that. What was supposed to happen in 5 years is happening in 2. The rate of acceleration, the compounded annual growth rate in Southeast Asia is something like 31% in the next 5 years, but it's nearly 60%, and I might be quoting the numbers wrong, Andy, so correct me later if that's the case, but I think it's 60% for 2020. So essentially, that's the underlying point. The only other topic that I think will stick, and for us might be relevant in ZALORA, but also for deliveries, is the future of work. So the work from home and the Zoom versus the office. And that has its own ramifications. Now, delivering to an office is cheaper because you can aggregate a lot of orders compared to delivering to a villa or a house, residential buildings. delivering to an office and working from an office means selling a lot of suit pants and dress shoes in my case, which at the moment I'm not selling a lot of. I can guarantee you that. So and then there's all the real estate implications. So there, I think a lot of people will go physically back to work, but a lot of companies, particularly the more technological ones, will not fully go back to work. They will maintain a flexible working environment situation. That's the only secondary point that I would have made, just to add something and not just repeat what the others said.
No, that was helpful. So I think we're about time around at least the main section. Maybe I'll just ask each one of you some of the questions from the audience as well. I think the first one is interesting. I think it pertains to all three of you. So as you look at the changes to your business model to react to COVID, how do you think of or any changes to, I think, cash flow break even or profitability targets for your individual businesses, within COVID or even the long term? Any changes to that? Giulio, do you want to just start with any thoughts around that?
Yeah, I mean, it's a difficult question for me because contrary to the other two, I'm listed. So I can only answer, unfortunately, redirecting everybody to a press release that Global Fashion Group released, I think, a week ago, if not even less, which talks about essentially increases our, the analyst versus analyst expectations and past forecasts, our profitability results, or essentially communicates them being better than expected before. This can be found on the Global Fashion Group corporate website under the Investor Relations section. I think I'll have to leave it at that.
Okay. Lynn, any thoughts?
I think for us, our profitability targets and so on is we have the same targets, right? To build a sustainable business that is in for a long run. So with COVID helping us a little bit more on increasing the volume, but at the same time we have increased costs, so we need to put in more capital expenditure, getting more trucks, all this. So all this comes at a cost where we didn't plan for it at the moment. So I think it's something we have to make some adjustments in order for us to continue to cater to the market growth as well as to cater to the cash flow that is expected for our year. So I think we try to work within our constraints and deliver based on what we can do.
Okay. Agung, any thoughts?
And do you mind coming back to the questions again? I think my connection dropped there.
No problem. So I guess the question was, obviously your business needs to be dynamic and obviously cater to the impact of COVID. But that's, I think, from an operation and strategy standpoint. Any thoughts around how you think about path to profitability and cash flows? Is the target to profitability being pushed back by, because of COVID? I guess, the audience is just wanting to get a sense more around its financials, I guess, performance in the long term.
Yeah. I think it's a good question. So I think it's not pushback, but I think a lot of people even pull it up. So I think it's become one of the biggest questions, especially a lot of investors has been asking to a lot of other companies. So and also probably if you talk to all the startup founders or CEOs, this will be one of the main three top things that they have in their mind, right? How to create this path to profitability. And I think it comes back to the viability of the economics of your operations of your business, right? And then again, especially here in Indo, because we have a couple of unicorns that are still working on this as well. And I think it becomes a bigger question, right? Do you guys going to grow big with such and then scale the burn rate? Or would be something different? Would you guys bring something other flavor to the startup industries in Indo? And I think to answer that, I think everyone, especially this the newer generations of startup is definitely put more minds on the profitability. And I would say for Warung Pintar, it's a quite straightforward game for us. So probably it's not something that are too far fetched. It's just a matter of how we scale smarter, because in Indo, I think again, it's a big place, right? So if we and when we want to cover everything, I believe Ninja Van has done that in a couple years ago. Um, it means a lot of investment, right? A lot of push, a lot of money to be pushed on the not only promotion but also operational capabilities. And this has been one of the thinking process that we've been going through on how we could create not only sustainability in terms of still operations, but also how we could still grow and be sustainable. So that's something that we've been putting on mind, and I think it's a questions that nobody could really answer that straight. And I mean, like, it would be unused if someone could like show this and like answer it very very straight. But I think from our side, it's something that we really think about, and we really work on that, and it has been one of our priorities from the start, from when we started. Yeah.
No, I think you're right. I think companies are obviously more focused around cash burn and conserving cash, but at the same time, what I've noticed, um, in some ways, growth has become more efficient, right? Because given the increased penetration, digital penetration driven by COVID, you actually don't need to spend that much to get users online anymore. So in some ways, that's so we've seen actually most people, I think, cash burn probably going down because of COVID. Um, then I think the next question, which I think multiple people ask, but in multiple ways, and to each of you individually, is really around competition. And so maybe again, for each of you individually, any thoughts around the competitive landscape you're in right now, um, and what do you think about the mid to long term, at least? Maybe Agung, maybe we'll start with you. Yeah.
Sure. I think for us is pretty right now it's an interesting time, because a lot of people are. I think obviously if you look at the news, a lot of companies start going to the segments, right? Going to the SMEs, going to the mom and pop shop, both in especially here in Indo. And right now is a time where I think it was happen because I used to work for a venture capitalist company, right? So I think it's similar to the time before, like 2014, where I think e-commerce and logistics space start to like slicing it down, who's doing C2C, B2C, and so on, so on. So I think right now for this space is the time where we still try to define and try to slice down where are whom and where are we. So I cannot say competitions who are our competitions like straightforward. It's very blurry, and people are changing their models and trying here and there. But I think the great things about, I don't know about the other market, but Indo right now, especially those who are quite similar in terms of industry, there's a lot of consolidations happen. And I think that's because the mindset of digital companies are pretty much the same, right? We see that, hey, it's very hard to negotiate with this our suppliers, so we have to work together and become bigger. And I think we haven't announced much, but in the past 2-3 months we've been working with a lot of similar companies who are doing warung and supply chains for FMCGs, and it has been terrific things, because I think it's easier when you to work with someone who have I think the for us in terms of competitions right now, it's less of a focus. It's more on we kind of find them that it's a time for collaborations rather than competition.
Okay, makes sense. Lynn, any thoughts around competitive landscape?
For us, I think logistics in general is a huge billion-dollar market. But in particular, if we just focus in on last mile logistics, we can see that from this COVID period, we can see that the demand could actually outstrip the supply that they have during this period of time. So we believe that I think all the companies that we have in the e-commerce, in the last mile logistics, there's room to go further in terms of everyone's own capacity. There's room for everyone to grab a slice of the growing pie. So I believe that in this area that there's definitely more competitors coming in. We see there are new players coming in all the time, but we do see that as long as we hold on to our niches, if we perform well and continue good performance, getting the right capacity in place, I believe that the whole industry can grow as a result, and then everyone can grow sustainably as well.
Giulio?
It's an interesting question for e-commerce. So look, we are growing very fast. We're growing faster than we expected, as the GFG press release also said. But something else is happening, which is very interesting, which is suppliers are making strong pushes in their multi-channel and omni-channel approach. So, back in the days, there was a very slow onboarding, and people would just go on Amazon or just go on ZALORA. Now what's happening is, if I look out there is a huge growth in suppliers opening their own websites. There is an upcoming momentum, and it's still a question mark of what Facebook and Instagram shops will do to the e-commerce industry. And at the same time, there is an acceleration of brands joining B2C platforms, whether it's us, Zara, Shopee, etc. So what is interesting from a competitive standpoint is that whilst I am growing faster than expected, we need to start asking ourselves the question mark, even if we're growing faster, are we losing share of e-commerce overall sales due to the big flourishing of proprietary channels over non-proprietary channels? Non-proprietary is the marketplaces. And that raises a question for us in ZALORA, whether we should start playing a bigger part in the back end, an enablement of e-commerce, fashion e-commerce, rather than just in the front end of fashion e-commerce, like we're very focused right now. So we go back to the investments like the one we had in the Philippines, but also to programs that we're putting now together, where we start saying, let's not fight it, let's embrace it. Let's enable brands to create websites and fulfill fashion websites, so their own fashion websites, with us. So again, I think it goes back, there is gonna be an increased competition. It's hard to spot because you're growing so fast overall e-commerce that you might lose sight of the fact that your share within e-commerce is not as growing as fast. But the key, like every shift in, deep shift in consumer or supply momentum, is to embrace it and ride the wave rather than try and pedal against it. So that's what we're thinking about. That's what we're looking at very closely. We're talking to Shopify. We're talking to the Facebook commerce team. We're talking to warehouse providers, and looking at ourselves also as such. So that would be my answer to it in that direction.
I got it. Okay. Your last sentence raised a good point. Is this one of the questions? So, how are your companies thinking about growing organically versus acquisitions, inorganic versus maybe partnerships? How are you guys thinking about it? And Giulio, maybe I start with you. If there's anything you can comment.
Look, so early in the days, I don't think it's any secret, we were big marketing spenders. It's not true anymore. So we've taken a very organic approach now. And for the marketeers in the audience, we've essentially lowered our CLV repayment targets quite drastically. So we now say our CLVs need to be paid within 6 months, for example, versus maybe we said 12 or 24 months back in the days. So that's one big point about it. The second big point about it is we see a number of trends at the horizon that one has to ride to be able to claim organic growth. The trends at the horizon are what I was saying earlier. So the fact that dominance of an industry online might not be pegged on dominance of the front end of that industry anymore, but might be equally pegged to the dominance of the back end. So to enabling supply might be as important as bringing demand. And that gives you access to supply, which is a much better way, especially in fashion, to grow organically than to spend a lot of money to bring the ideal customer for the supply you have. And the other one, if I look at it from a demand perspective, is video. So it's very clear that something is happening in terms of the consumer propensity to shop via video. And this is very relevant to fashion. I've seen Shopee make this play. There's old-time e-commerce players like Momo in Taiwan that actually were born on that segment, on the video segment, and then moved into e-commerce, but still make video big. I think ByteDance and TikTok, the subsidiary TikTok, are making it very clear that this is a bet in this direction. Google came up, I think only yesterday they announced that they rolled out their video commerce solution. So I think video will be key in my segment in fashion to being able to keep growing organically versus pushing the old segment. Even I think your report, the Goldman Sachs report, was actually forecasting 20% of total e-commerce sales coming from video in the next 5 years. And I would say probably in fashion, it's a lot more than 20% because you're not very likely to shop frozen foods and fish on video, but you're probably very likely to shop household items and fashion. But yeah, I would encourage everybody now to be focused on that organic side and on that CLV repayment, because now more than ever, customers are fickle. So I wouldn't bet too much on whatever data you're getting on repurchase rate might change with the movements of the pandemic and COVID.
Right, that's helpful. Lynn, any thoughts? Partnership, unique and organic.
I think for us, we are still focused a lot more on our organic growth, but I think we do focus on how we can work with our own partners, like different lanes. So maybe things like working with our Singapore, having like Malaysia, Singapore, more cross-border flows within our countries, and still focusing a lot on organic growth. I don't think we have any plans for any acquisitions, major partnerships at the moment on this area.
Okay, I'm going. I guess the last comment. We're running out of time. So any thoughts? No rush, but love to hear you.
Okay, I'll be quick. I think for us it's depends on the opportunity and the effort, right? So I guess I think for us, since we are very small, then organic is still very impactful. But then I think partnership and M&A possibilities is still up there, and I think it depends on like I think people will see that hey, an organic sounds easier, right? Do partnership, and you come up with more users or increase in revenue, blah blah blah. But if you look at deeper, then there's also effort around it, right? And then I think sometimes the effort is also higher than your organic effort of acquisitions or your growth. So I think again, it's coming back to resource management, and I think at this point of time, right, since like money and burn rate and runway would be the most important thing that you have in mind. I think then again, it depends on the effort that you want to build, that you want to spend, compared to like outputs that could be generated. So I cannot say I'm leaning towards each of them, but I guess it's coming back to your wisdom of how much resource or effort or stamina that you want to spend on each, and how you measure the projected impact of what's going to happen. Indeed.
Okay, all right. Thank you for that. So I think we ran out of time for today's session, but thank you, Giulio, Lynn, and Agung for spending time with us. And to our audiences, thank you for joining us this afternoon as well. The recording of today's session, just so you know, will be available next week. And you have not already registered, remember to register for next episode as well, and stay tuned. All right, thanks everyone, and have a good day.